what we have learned before. We have studied support resistance, the market trends, the pin bar, engulfing, star patterns, and the double tops bottom and head and shoulders pattern. So today, I'm going to see some other candlestick patterns. And with that, I'm going straight to my charts. I'm sharing my screen now. If you can see my screen, just let me know. If you can see my screen, just let me know so that. Okay. Let me know if you can see my screen, and let me see what you are. Let me hear what you are saying. Okay. I've unmuted everybody, so you can unmute yourself and talk. So are you seeing my screen?
Yeah, I can see your. Yeah.
I can
Okay.
see your screen.
What can you see on my screen?
Yeah, I can see it.
Okay. What are you seeing so that I'll know if you are seeing the same thing? Let's be on one page.
British pound USD dollar GP 1.25551.
Okay. You
Right?
can see my screen. Yes, sir. Can see it. Okay, so let me move to okay. Okay, I'm going to mute everybody now so that
I've dropped the message, so
all right, right here. Yeah. So today we're going to be looking at the doji. We'll be seeing the doji. The doji is a simple candlestick pattern that is like this. Like I said that day, I didn't explain it, I just mentioned it. So today I'm going to explain what a doji is. The doji is a single candlestick pattern that looks like a plus sign, something like this. Just a plus sign. So this is your doji, just plus. It's as simple as this, but it holds a lot in the market. Now, the doji, it shows indecision in the market. First of all, I just want you to be taking these points down. If you see a doji, know that it shows the market is just indecisive. So neither the bulls nor the bears are in charge of the market. Because if you look at it very well, according to our explanation of candlestick, the market opened at this place, went as high as this place, came down again to this place, came up and closed exactly where it opened. That is what the closure tells you. The market closed exactly where it opened. So at the formation of this doji, the sellers are not in charge of the market. These buyers are not in charge of the market. So the market is flat in position. Now, ordinarily, if you see a doji in your chart, it just tells you that a trend is going to continue. Is that what a doji tells you? That the trend is going to continue. So I'm going to go through my chart now. Okay, so let me just go through as you see examples of where doji were formed and what actually happened after the doji were formed in the market. Okay, I've seen one here. Now, this market was consolidating. If you look at this place, the market was just consolidating. And when the doji was formed, the market still consolidated. Nothing much happened in the market. So let me see another example of doji. Yeah, like since it represents indecision in the market, you see a doji appears more in consolidating markets. But when it appeared, like for instance, this uptrend was given, then the doji and the trend continued. Now, if you look at this pattern very well, like what I taught you the last time, this is a bullish engulfing back pattern. And you see how the price, how market reacted to this. Are you getting me? So also this doji was formed here at a resistance and market started coming down. In a doji, when a doji forms, nobody is in charge of the market. Just note that. Now we have the bullish doji and we have the bearish doji. We have the bullish doji, which is something like this. A bullish doji and a bearish doji. So these are the types of doji we have. This one is bearish, while this one is bullish. A bullish doji that is formed as a support shows you that the market will start buying. It's not now. There are names for them. Like for instance, this one is called gravestone doji. This one is called dragonfly doji. But I don't want to bore you with their names. I just want a situation whereby if you see this thing appears in the chart, you know that okay, this is what is going to happen next. If you see this one appear in the chart, you know that this is what is going to happen next. That's what you should know, not necessarily the names per se. So let me go through and see some examples. Let me see some examples of the I want to delete drawings. Okay, so let's see some examples in that chart of this doji. This is a bullish doji that was formed here. I want to expand my chart so that we'll see it clearly. Okay, so this is a bullish doji that was formed here. You can see that the wick is under the small flat body. The doji does not really have a very big body like these other candlesticks. You see that the body is always very tiny. So when it was given, it just danced a little bit before going up, actually. So from here, if you enter with this doji and know that this is actually a support, like I said before, everything that I'm going to be teaching you works with support and resistance. Everything that I'm going to be teaching you works with support and resistance. So you must always look out for support and resistance first. For support and resistance first before you start taking those trading decisions. So this was a support. The market came here again, support. Now our entry confirmation was this doji, bullish doji that was formed here, and the market started going up. So when you enter a trade like this, you place your stop loss below the formation of the candlestick, or preferably below this previous low, that's the previous support that was formed. Then your take profit first of all should be at the next resistance, which is this place, even though the market actually broke above it. But you see that the market did a little bit of consolidation here before it finally went up. So if I enter a trade here, for instance, and I take profits at this place, I think this is a good trade. You know, we don't have to be greedy in the market, but I think this is actually a good trade. So that's for our bullish doji. Let's look for a bearish doji. Now, don't confuse a doji and a pin bar. This is a pin bar. This is a bearish pin bar. You saw what happened. After the bearish pin bar was given, I thought bearish pin bar on Saturday. As we continue, everything that you are going to be learning will start coming together. Everything you'll be learning will start coming together. So this is the bearish pin bar that was formed here, and you see the market dropped and dropped well. So let's continue. I'm looking for a bearish doji so that okay. Now this is actually a star pattern. I don't know, I'm going back so that to some extent I'll refresh your memory. So this is a star pattern that was given, a bearish star pattern, a bullish candle, a doji, a bearish candle, as in it met the conditions. It met the conditions and market started dropping. So let's look for a bearish doji in our chart and see. I believe this is actually simple enough for us to grasp. If I'm not seeing one, I'll go to another time frame. Okay, I saw one here just now. This is a bearish doji. Let me expand my chart. So a bearish doji was given here, and you see the market started dropping, went up again and dropped. So ideally, this is where my first take profit should be, because this was the last flip zone. This was the last flip zone. So this is ideally where my take profit should be first before considering any other next one. After this place, the next place that market should come to test should be this place. So if I enter a trade with this bearish doji and I put my stop loss above it, my take profit doing here is not is okay, it's fair enough. Yeah. So as you are trading, also be guided against greed. Also be guided against greed. Me, I don't I think 20 pips for me is fair enough. That is how I trade. 20 pips for me. Those that are in my students know that with me. 20 pips for me is fair enough. You don't need much. If I do that, although you can do 50, yes, 50 is okay. 70, 100, but from 20, I am okay. Okay, the next thing that we're going to be looking at is what is called the scissors tops and bottom. The scissors is called scissors tops and scissors bottom. That's the next thing we'll be looking at. So it's something like this. Sorry, I'm expanding the chart. Okay. Is two candlesticks that are formed together. The scissors top and bottom is just two candlesticks that are being formed together. That is what the scissors top and bottom is. So for the scissors top, the first candlestick is a bearish candle. For the scissors top, the first candlestick should be a bearish candle. That is our red candle formed. Something like this. Like this. Then the next one should be a bullish candle. That is a green candle. Now, one thing you should note about a scissors top and bottom is that both candle has to be equal in size. Both candles has to be equal in size. One should not be bigger than the other. So they have to be of equal sizes. So if the market peradventure was going up, okay, this actually is scissors bottom. Let me erase it. I I missed it. Let me delete this and draw it here. Okay, so the scissors top is something like this. Market was going up and up and up and up and up, and all of a sudden it gave this something like this. So I have this first bullish candle. And the next one, I'll have a bearish candle. So this is the next one. Note that they must be of the same size. So for a Swiss stop, the first one should be bullish. Let me write it out so that we will, let me write it first. So for the Swiss stop, first candle should be bullish. Why the second should be bearish. Okay, that is it. Let me expand it now. So this is for the Swiss stop. First candle should be bullish, like this one that is formed. Second candle should be bearish, like this one. And what happens there is that you see the market starts dropping. The market will just start dropping after the bearish candle is formed. So that is for the Swiss top. Now for the Swiss bottom, the first candle you are going to get will be a bearish candle. Then the next candle will be a bullish candle. And market starts going up. I hope we got this. So this is the Swiss top. This is the Swiss bottom. Now, when you want to enter your trades, after it is formed, don't enter the trade where you think that the thing is going to form. It's a very wrong way to trade. Don't enter your trade when you think that it's going to form. Enter your trade after it has been formed. So after it has been formed, you enter your trade. Normally, your entry should be at this bottom. Your entry should be at the bottom. Your stop loss should be above it. And your take profit should be the next flip zone. The next flip zone should be your take profit. So I think I can go to the chart now and see if I'll get some examples. This candlestick pattern really happens in charts. You may not always see it. There's some candlestick patterns that are like good. It's not like the engulfing patterns that is everywhere, all the star patterns. So I'm trying to look for one. There should be of equal sizes. Okay, this can actually pass. I don't know if you can see this. Let me use myself. I don't know if you can see this. Okay. Highlighting this at the top. I hope you can see this here. So this can actually pass as a tweezer stop. You see the first candle was bullish. The second candle was bearish. Like they have the same sizes and it starts coming down and down. You see, like I said, that your take profits at first should be at flip zone. So this is a flip zone. This is also a flip zone. You see what happened when market got to those areas. Let's look for another example so that we can see. I do examples because want to refresh your memory a little. This is a star pattern, police star pattern. So I do examples so that you will know what we are not doing just, I'm not teaching you what does not happen in the market. That's why I will always make sure I get an example so that you will see examples to work with. So I'm not teaching you what just enters my head. It's what works in the market and what I used to trade. That is exactly what I teach. And if you follow today, this evening, I dropped a chart that I took, a trade I took with just bearish engulfing pattern, just bearish engulfing pattern. Now, I know some persons may be wondering, what time frame does this thing work? Everything I'm teaching you works with all the time frame. This is also a bearish scissor stop. You see that the first candle bullish, second candle bearish, and the market started going down. So, like I was saying, everything I teach you works with any time frame, any time frame. So you want to just flip into any time frame and start looking for these things in the chart. This actually helps your sight. Is you training your eyes to see them so that you will always recognize them when they happen in the market. Okay. I'm actually looking for another example. Let me check another pair. Okay. I'm looking for other pairs here. Okay. Let me go to it. Okay, I won't follow. Please, if you have a question to ask, use the chat box. I just don't want background noise. That's why I muted everybody. Um, like I said, that these scissor stops and button, they are rare to find in chat. They're like good. So if I don't see any example, I hope you got. I've given you two examples already, so you can actually work with those two examples, and maybe look for others. Look for others on at your spare time. Please, not really at your spare time. Create time. This is if you don't give attention to learning, this you will not know. This I think I saw one just now. Um okay, no, it's not. I wanted to pick out this one, but I think one was bigger. So one is bigger. Okay. Very star pattern. Please, are you referred to our class of Saturday on Friday? Sorry, is in my YouTube channel. Because if I start explaining now, we'll not live here. I dealt with it very well on Friday. Please, you go to my YouTube channel to see it there. There, thank you, sir. So the next we are going to be looking at is pause. Explain the very stuff. Okay, thank you, sir. Thanks for understanding. So is the angry man funny? So we're going to be seeing the angry man is a candlestick pattern. So is made up of two. Although people will say that it's made up of one, me, I prefer it when I see it with another candle. That's what gives me the confidence to trade it. I don't trade it alone. So An hanging man is an inverted hammer. Is an inverted hammer. That's what an hanging man is. That's what the hanging man is. So I will always draw so that we understand better. So let me make a drawing of what the hanging man is. Like I said, I always love trading it with another candle be formed alongside it. I don't trade it alone. So I have my first candle here. I have my first candle here. And the hanging man, like I said, is an inverted hammer. So it's something like people. This my drawing. I know it's very fine. I did not do fine art in school. That's right. Okay. It's something like this. I want to do this and draw it again so I will be better. Okay. Perfect. So let me draw it again so that it will look like something that is normal, not abnormal. All right. So this is what an hanging man is. So for this is actually a bullish hanging man. For the bearish hanging man, you have something like this. The first candle, I have the first candle, and I have my second candle formed right next to it too. They are formed together. I think somebody unmuted himself. Let's see. I don't really want any. Oh, thank you. Oh, I have to mute you. Okay, so this is what our hanging man looks like. It's an inverted hammer. You know, normally an hammer is formed like this. Like, so yeah. An hammer is formed like this. You get me? Something like this. But this one is formed within a candle. An hanging man is formed within a candle. I can see a very good example here, just right here with me. So um let me expand my chart so that you can see it properly. This is an hanging man. Oh, wow. Okay, this is actually an hanging man. You see our first candle. We see the second candle formed right next to it. This is an hanging man. It's a bearish hanging man, so you expect market to drop. And I think this happened few hours ago. This is 8. This is 7, 6, 5, 4, 3. Am I correct? Yeah. So this happened at 3 p.m. this afternoon. And you can see the market started dropping after the hanging man was formed. Okay. So let me look for other examples. That one was just right there. I guess I'll see more as we go. Okay, look at another one, hanging man. So the first candle, like I said, some persons will trade just it, but me, I prefer when it goes with another candle. So the first candle was formed, the second candle was formed. I see that the thing started dropping. So this is an hanging man, a bearish hanging man. Now, this is not an hanging man. It is not, because the candle was formed after it, not before it. The last candle must be formed before it. You understand? So this is not an argument. This is an argument. Um, let's continue. Examples help us. Like this is not an argument. This is actually a bearish engulfing bar pattern. So I want us to be graphing the differences between them so that we will not trade wrongly. Yeah. I don't want us to trade wrongly. I'm not seeing another good example that I can use. I think I'm going to go to another time frame. Let me see if I'll see it in a lower time frame. I'm actually not seeing it in a lower time frame. I don't want us to just spend the whole time checking. And it's still best to encourage me. When we finish a class, you can just go through the chat and when you see some examples, you screenshot and send to my DM. It should be nice because this is actually an academic. What we do here is to learn. So it will be very, very nice if you can just go through your chat after class. When you see a pattern, just send to me. Please, it will make me to be smiling while working on it. Okay, I guess there is no other example. And hope we get the point first. You can mute yourself and ask questions. Unmute yourself. If there's no question, I'm going to continue. Is there any question here? Did we get this point?
Yeah, wait on ma.
All right, sir.
Yeah, what is there any difference between this angema and the armor?
Okay.
Because the
Like
thing look like armor.
yes, I know it looks like armor, but the positioning is different. That's what you should know. You should notice.
Okay.
Okay. For instance, I think I saw the Angiman in. Let me check this one. Let's see. Let me go to one other time. It actually looks like armor. That's why I say the Angiman is an inverted armor. Okay. So for instance, look at the way this one was formed. I see now it is formed in the chart. It's formed at the top of the chart. Now it's not formed it's not formed like this. Are you seeing it?
Yes, I can see it.
Yes, it's not formed like this at the bottom. It is formed at the top like this. Why are you drawing on my screen like this? Seriously? Emmanuel, you are drawing on my screen. Can you stop drawing on my screen? Thank you. So, like I was saying, the inverted armor is the well, Emmanuel, please, this is not really nice. So this is an inverted armor that is formed. That is what the argument is. Why the pin bar, which is the normal armor that we all know, how am I going to remove this from my screen now? Is like this. Hope you get the difference.
Yes, I can see.
Hope it's okay. Okay, the next question.
Yeah, you wanted to explain bearish star pattern and bullish star pattern.
Emmanuel, sorry, I'm have to remove you from my class because you are joining on my screen. All right.
Yeah.
Thank you.
Can you hear me, ma?
Yes, I can hear you.
I said you wanted to explain bearish star pattern and bullish star pattern.
No, I was just making reference to them because I thought it's something I taught last week. That was on Friday. So as I was going through my chat, I was seeing them. So I was just like refreshing you guys' memory.
Okay.
Yeah, that's it. So is there any other question?
Yes.
Okay.
So the
Hello?
question.
Hello.
I can hear you.
Okay, now what? Hello.
I can hear you. I can hear you.
Yeah. I want to ask,
Okay.
can I use this to the pattern to determine the trading on the market?
Ah, sorry, please come again.
Can I use this explanation to determine the movement in the market?
Yes, that's what I'm teaching you. You use it to determine the movement of the market. Like I said, that when it is formed at a resistance, you place a sell order. Like I did, like you
Okay.
saw here, this is an argument that was formed here, and the market
Okay.
started dropping. So when I say an argument that is formed at a resistance,
Okay.
when I see an argument that is formed at a resistance, what I do is to place a sell order. I put my stop loss above the pattern. I place a sell order. My first take for profit should be the next flip zone, which should be here and here. Hope that is clear. The person that has the question.
It's clear. Please, ma, I have a question.
Okay.
My question is, like, from your own edge now, for you now to the way you trade your, is it this hanging man that a candle
Okay.
must form before that other smaller body candle at the top? But I cannot differentiate this hanging man with that of pin bar,
Okay. Now,
be it
the
resistance or support.
okay. The argument
Thank
is
you.
formed. The argument is formed at the top. Like, this is the argument. It's formed at a resistance. Now, for a pin bar, I just explained it just now. Look at a pin bar. Are you seeing where, like, the different locations they are formed in the chart? That is what you should know. Look at where
Okay.
this one is formed. Now, look at this one, where it is formed. Are you seeing it? This is an argument. It's just the
Yes, ma'am.
difference in the location. That is what tells you if it's serving as an argument or if it is serving as a pin bar.
Okay, okay.
Are we good?
Yes, ma'am.
Okay. So who else has a
Thank you.
question?
Hello.
Yes, sir.
Hello. Yeah. Can we trade based on candlestick pattern alone, as in if it's from an angry man or from a armor candle? Can we trade based on that without any other conferences?
Okay, you take it along
That's
with
my
support and resistance.
okay.
Yes. I want
But
to
from all our classes, we don't draw the support or resistance there. Can't
you know,
I don't understand. Okay.
although me, if I see a support or a resistance, I know I may not draw it. What you want to know about support and resistance is that you always look behind your chart, like you scroll back in your chart. Now, for instance, this is a resistance zone for AUD USD. This is exactly the trade I took this afternoon. So this is a resistance, this is a resistance. So let me draw my, let me use my, I want to use, I'm not using figure. Let me delete this. I want to use my rectangle to mark this edge. So I have something like this. This is a resistance zone. And this is actually the next thing I want to teach you. So just stay tuned. I will add both together. So this is actually a resistance. Okay, I will respond to your question and come in next thing. So you see that this pin bar is a bearish pin bar that was formed as a resistance. Hope you are seeing it. And when I got this, I took it sell. Though I'm still on the trade, I don't know if I will close the trade before I go to bed. But I'm currently in this trade right now. So you see what happened. The resistance, the bearish paper was given at a resistance and the market started dropping. my take profit is somewhere around here. Though as I'm talking with you now, I've actually closed the trade. Like I've moved my stop loss from this point. I moved it to below. So even though the thing reverses and hits my stop loss, I'll still be in profit. That is another way to trade. We'll learn it later as time goes on.
Oh,
So yes. So hope you understand.
yes, ma'am.
Okay. Sir Austin, you are raising your hand. Please unmute yourself and ask your question.
Sorry, ma. Can you hear me now? Can you hear me?
Yes, sir.
Yeah. So the resistance place is where this rectangular touch at the left side and where it touch again at the right side.
Where it has touched before, like 2 times. Anywhere
Yeah.
the market reverses from more than once is a resistance or a support.
Okay. Okay. Support is when you fall under, right?
Yes, support is under, resistance is above. I think that is
Okay.
simple. Okay, so the next thing we'll be looking at, which will be the last for this evening, will be our triple tops and bottom. Like I think on Friday we talked about double tops and bottom. Well, let me just refresh our memory a little. For double top and bottom, we have like an M pattern where the market goes up, comes down a little, goes up and drop. This is our double top. But however, for our triple tops and bottom, it has 3 touches at a resistance or at a support. So if it is at a resistance, that it will be a triple tops. If it's at a support, to be a triple bottom. So that's why I said this is the next I'm going to teach you. So we saw our first touch, the second touch, a third touch, and the market is coming down. By the way. So this is a triple top bottom, a triple top pattern. Sorry, this is a triple top pattern. So when you see a triple top that is formed, you just place your trade. Like I use candlesticks as my confirmation. You understand? So when the candlestick is formed, I'll know that okay, this trade is good to go. It's not necessarily like I'll just see that the market has a triple top. I will wait till a candlestick is formed before I enter a trade. That is how I trade. So even though it's a triple top, a bearish pin bar was formed before the market actually started falling. Hope we get on. You get me. Sorry. So if I enter a trade like this, like I did this afternoon, I place my stop loss right above the formation of the triple top. So my stop loss will be somewhat here. My take profit will be at this flip zone here. This is a good flip zone. So if it continues, if I feel like entering again, or if I took 2 positions, my first take profit will be there. My second take profit will be there. Hope is clear. There is no okay.
No.
No question. Oh, sorry, sir. Why is it not clear? Let me hear your question, please.
So why is it not clear to me is that where you say you want to take you want to place your stop loss. Can you help us draw something? Let us see. And what
Okay.
make you choose that point? What is the support that make you choose that point as a stop loss, a safe stop loss point?
Okay. So this will be my stop loss. This zone, the zone above it will be my
stop loss will be up. Sorry. Stop loss will be up. I was supposed to say take profit. Yes.
Okay, take profit.
Yeah, because it's a selling, selling market. Yeah.
Yes, my take profit will be here.
Okay. Okay,
Another
fine.
take profit will be here. These are psychological zones. You get. Now this is a flip zone. This is also a flip zone. Now the market naturally, when it comes to this zone again, there will most likely be a reaction. Now let me just draw something like this. The market can come here, fall to this place, and bounces off it. You understand?
Okay.
Yes.
Yeah.
Now, it will bounce off it. When this bounce comes, if I enter my trade at this top and this bounce comes here, I will definitely lose some of my profits. That is for sure. Because the market is reversing. Now, it can either reverse to this
You
top,
definitely what?
lose some of my profits.
Okay.
So the market can either reverse to this top, you get, or it can, after doing this minor, it's called a pullback, sha. After doing this minor pullback, it can come again and stay, come and rest here. So that's why I say it's a psychological zone. So I either take my profits here, like
Okay.
just here. Then if I take
And-
2 trading positions, I will take like the next profit here. Or better still,
Sorry. Yeah. Clear.
I'll
Clear.
take my,
So
it's clear, right?
okay. Sorry. If you take a profit here, can't you enter another market, another sell again?
Okay, that is what I wanted to explain before you taught me.
All right. Okay.
So
Fine. Go on. Go on.
when it gives this pullback, it may likely pull back to this place. Are you seeing this place? This zone, because these zones, this place that the market did reversals, you should always take note of reversal points. So it may likely pull back, and if it gives me a confirmation, like if I see a bearish engulfing bar pattern, a bearish pin bar, a bearish star pattern, and any other bearish pattern I see, I can take another trade and follow it right to this place. Are we good?
Okay.
Okay, so can we look for I want to look for a double bottom. We just saw double top. So let's look for a double bottoms for that. Don't know if you can see. Okay, I'm coming. Let me remove this indicator. Okay, I've removed it. So I think the chart is clear now. This is a first touch. This is a second touch. This is a third touch, and the market went up. So let me draw the so you have something like this. So let me delete this. I don't know if you got what I just did. I saw a good pattern. Okay. Let me look for another. I'll look at another pair. Now, somebody was asking me about the time frame. The person wrote it in the chat box. Now, this works for any time frame. I've been repeating it. This works for any time frame at all. This works for it. So it's not limited to just one time frame. Okay, I think I found one. So this is it. The first touch, second touch, and third touch, and the market started going up. I'm reversing my chart. This place that I'm finding this thing. Okay, let me reverse it back. Did we get the concept of double bottoms? Are we following?
Yeah, we are.
Did you get the concept of double bottom?
Yes.
Okay. This one is a double. Okay. So is there any question?
Yes, I have a question.
Okay, sir.
If we can trade with one time frame, where is idea of multi-time frame coming from?
Okay, the
Because
multi-time frame is just for analysis purposes. Now, for instance, this is a 1 hour time frame. You can actually see that this I want to try to explain so that you understand better. Okay, so I was explaining, you may likely see a support here. Let me just use this as an example. You might likely see a support here in 1 hour time frame. But when you go to a higher time frame, you can see that that support was actually a resistance in an higher time frame. I don't know if you are getting me. That as in that thing works a lot in the market. Now, okay, I've seen a triple bottom here. Let me this is a triple bottom. First touch, second touch, and third touch. So like I was explaining, for the idea of the multiple time frames, number one, bigger time frame shows you the overall trend of the market. The overall trend of the market. That's what bigger time frame shows you. Now, bigger time frame also shows you psychological support and resistance zones. So that something can be a support in a 1 hour time frame. But if you go to a daily time frame, that support can will actually be a resistance. Hope that is clear. The person that asked the question, are we good?
Yes, it is clear now. Yeah.
Okay. So if there's no other question, that'll be all for this evening. We'll meet again.
I have a question. No, I have a question.
Okay.
I have a question.
Okay. There are two questions, but the first one is on this time frame. For example, now maybe if I analyze a pair, let's say Euro USD on 4-hour time frame, and I see that thing is coming down, that is selling, and 1 hour time frame is still selling. How will I know whether I will enter from that 15 minutes or the 1 hour?
What you analyze in your bigger time frame, you enter
You
it.
show is
Yes.
okay.
If in 4 hour time frame, the market is showing me that it's likely going to sell.
Yes.
Even though I'm seeing a buy in 15 minutes time frame, I will not enter that buy because the bigger time frame always carries the vote for
Control.
the day. Yes. So
Okay.
I
Okay.
will wait till the smaller time frame shows me a sell
Sell.
pattern. Yes, before I will enter. Don't trade against what the bigger time frames are giving you. It's wrong.
Okay. But how will I know what if it's 1 hour I traded or 15 minutes?
You will know now. Look at, are you seeing this place that my cursor is? Are you seeing 4H?
Sir,
Are you seeing 4H here?
I've seen in the 4 hour time frame.
Okay. So if I click on 1 hour, this chart goes to 1 hour. If I click on 15 minutes, this chart goes to
Yes.
15 minutes. If I click on 30 minutes, this chart goes to 30 minutes. I can even extend it. Look at 1 day, look at 1 week, look at 1 month, 3 months, 6 months, and 12 months.
Okay.
So what is the best frame from you advice?
For that, I analyze my chart from 4 hours. And I take my trade for maybe 1 hour, 30 minutes, but I don't go below. There are some people that scalps. They use 1 minute, 5 minutes to trade. Me, I don't do that. I don't have that energy. Because if you are using lower time frames to trade, you will stay in the market more. Like, you must always monitor your trades. That is what scalping does.
If you use lower time frame or higher.
Yes, like some persons lower. Some persons trade with 1 minute, some trade with 5 minutes. Me, I don't go below 30 minutes or 15 minutes.
But you don't go below 30 minutes, and you
Time
don't go
frame.
above.
No, I used to check daily. I check daily. Why I check daily, I want to know how the previous candle closes for me to take a
Okay.
trading decision. So let me take this chart to daily for us to see. So this this thing now is on the daily time frame. Then let me expand. Okay. Now, for instance, I want to see something. Okay, so we are here now. So this is a daily time frame. Yesterday, the market closed with a bullish. No, today is Monday. So on Friday, the market closed in a bullish way. So we expect that this market will continue being bullish. So that's how we check the previous candles close. Now I'll put my resistance point at this place. So this is okay. We learn top-down analysis later, but this is what top-down analysis does. Is checking the bigger time frames first before going to the smaller time frame. So this is my daily time frame now. Yes, Friday it closed bullish. Today it continued with the bullishness. Now I'll go to my smaller time frame. Let me go to 4 hours. Now, this is 4 hours and all of this stuff. Now, sometimes if I did not go to a higher time frame to check, I may see a support at this place and want to enter. Now, this is 1 hour. This 1 hour time frame, the resistance I marked in daily, are you seeing it in this 1 hour time frame?
No,
No.
no, no, no.
You get, but there's a resistance that this market is going to. Now, if I did not check the higher time frame first, I may just keep on buying and say, hey, the market is buying, the market is on an uptrend, let me continue, without knowing that there is a resistance in an higher time frame for me to be aware of. Do you get the concept of checking higher time frames first?
Yes, yes, yes.
Okay.
That time frame, like a day.
A day,
Then
1 week, 4 hours.
okay,
Yeah.
a day, 1 week, 4 hours.
Yeah, those are candlestick in those how do I put it, in those charts, those time frames, they respect the market very well. They respect the market
Yeah.
very well. Yeah. So
Okay, ma. Hello.
yes, sir.
In the same vein, maybe if one is using maybe smaller account to trade, and they want to trade like 1 hour, after confirming it from 4 hours, maybe daily, how can one mitigate the trade so it will not run loss?
And
Maybe if
trade
it's trading
according
1
to
hour.
what your 4 hour is telling you. You understand?
Okay. So that means someone will not switch to 1 hour and trade. You will, after checking in a day, a week, so you can now trade at the 4 hours, man. Is that what you're
You can
saying?
trade, yes, you can trade at 4 hours. You can trade at even 15 minutes.
I think
So,
we are
Okay.
talking about lot
for
size.
instance, now, the thing is, your market depends on your lot size too. So if according to my analysis, the market is going to sell from 4 hours or even daily, I will wait. I will go to like 15 minutes or 30 minutes, and I will look for sell entries according to my analysis. I will not go against my analysis. Now, even though 15 minutes is giving me a buy, you understand? And according to my analysis, the market is going to sell. I will not take that buy. I will wait. Are we good?
Yes, ma. Yes, ma.
So what's the best
No,
lot
the
size
the last line was not clear. He said even if the 15 minutes giving you something like that, he said something last.
Even if after analyzing on higher time frames, maybe my analysis is telling me that the market is going to sell. Now, if I go to 15 minutes and 15 minutes is showing me that the market is going to buy, I will not take that buy. I will wait till I see a sell
Okay.
confirmation before I enter the trade.
Okay.
Okay. So somebody was
I think what
asking about lot size.
I think what the first guy was, yes, I'm asking about lot size to use, not lot to run loss when you are trading on
Okay.
1 hour candle.
Your lot size depends on your account size.
Like that.
You cannot have an account like, I don't know if you were in the basics class. When we are
I
taking the
was
basic class, I said for risk management purposes, account size is below $100. Use 0.01 lot size.
and with that 0.01 lot size, be able to trade for 1 hour chart.
Yes. Yes,
That's
you
running
can
loss.
trade 1 hour chart. Yes.
Please, I have a quick. Mine is not, it's like I want to confirm something, please.
Okay, sir.
Like from your explanation, what I think I'm understanding from your explanation is that if maybe I'm in a 4 hour time frame and I see maybe a bearish or a bullish confirmation, let's say I see a pin bar or I see a hammer. So are you saying I should just, based on that, I shouldn't go down to a lower time frame maybe to take on any other thing? Should I just enter the trade based on that confirmation on the 4 hour time frame?
It's advisable you go to lower time frames to take the trade because of stop loss issue.
Okay, so if I go down to a 4 hour time frame, now I saw a hanging man on a 4 hour time frame. That means is a bearish signal. So if I go down on a 4 hour time, or maybe on a 30 minutes time frame, what really should I be looking for? To show me that since I've seen a bearish signal in the 4 hour time frame, what should I be looking out for on the lower time frame that will aid me to enter the market?
You look for more bearish signals.
Okay, either candlestick pattern or a chart pattern.
Yeah.
Okay.
That is it. So I
Please,
think that is
one more question.
Okay, sir.
Sorry for the story because this time frame something. For example, now maybe if I have a chart pattern or candlestick, one particular or two type I normally confirm to get when I will sell or buy, and I analyze with either 4 hours or 1 hour. Okay, let's say I analyze with 1 hour, and 1 hour is showing selling. And you know that in that, if I'm trading 15 minutes, that is, it will be like 4 candles in that 15 minutes that will make 1 hour. Since that 1 hour now is showing buy, that is going up, is longing, and maybe I now check 15 minutes, the first candle is showing selling, the second candlestick is showing selling. If the third candlestick now pick buying, I'm good to take the trade there based on the candlestick or chart pattern I'm using. Hope I can take the buy from the third candlestick since there are 15, like in that 15 minutes now there are 4 candlesticks that make that 1 hour.
Forget those 2020 calculations. Just take the trade where you see the your candlestick pattern form. Yes. Forget
that conforms to the 1 hour.
Yes, that conforms to the 1 hour.
1 hour. Okay.
Yeah.
And one can easily scalp so that curiosity plus based on the account size one is using.
Yes, you can start. Now I just saw something here.
I'll just okay. I'm hearing you.
This to everybody. If you can look at this properly, this is an angry man. Where my cursor is right now. If you can look at it properly, this is an angry man. Now this is a bearish pin bar. Hope we get the difference. You see that
So I even have
actually
question on this hanging man and pin bar. I've seen the one for hanging man, bearish hanging man, and that of a bullish pin bar. But I've not seen the one for maybe bullish hanging man. The difference between this bullish hanging man and the bearish pin bar.
Look at a bearish pin bar. This is a bearish
So I've
pin
seen
bar.
this one.
Yes. This is a bullish pin bar. This is a bullish
Pin
pin
bar.
bar. Yeah. So the hanging man, okay.
But
I've seen
you
one.
told,
Let
you said
me.
the pin bar is supposed to be on the bottom now. Why up at this
No,
time?
it's not on top. Look at where the wick is facing. It's facing down.
Pin
This
bar,
is a
pin bar.
pin. Yes, this is a pin bar now. It's facing down.
All right, all right.
Yeah. Now I just saw something. Now I can take this for an hanging man. This is a bullish hanging man. You see that the pin is facing up. But
Yes,
hope we get this
it's
now.
facing up.
Are you seeing
Okay,
it?
it is the
This is
pin
a
that we are talking. Okay, the
bullish.
pin is facing
Yes,
down.
yes. This is a bullish hanging
Bullish
man.
pin bar. Eh?
No,
Okay.
this is a bullish hanging man. This is a bullish pin bar. Don't worry, with time
Okay.
you will start grasping
Okay.
it. Now this is a
Okay.
bearish hanging man.
Yes, I know this one. I've known this
This
already.
is a
Yes, yes.
bearish pin bar.
With time, we'll grab it, sure.
Yes.
I believe.
Okay, that'll be all for this night.
Okay, before the
Appreciate.
end of the month,
I appreciate.
today is starting. We still have like 2 weeks to go.
Yes, we have like 2 weeks to go. For those that made the condition, like
Ma, please. Hello, I would like to plead on this, pertaining the statement of account. I will visit the bank tomorrow. Please, you should still give us